Okay, good morning, everyone. Today is Tuesday, December 8th, and I'm Michael Boutros. Want to welcome everyone to this live intraday strategy webinar on SB Trade Desk. Christopher, good morning. Permendra, Graham, John, Mark, great to see you guys here this morning. So let's jump right into the charts. It's been kind of tricky trading lately. We had that nice move to start off the week. Obviously, last week was an awesome week, but we're coming into some pretty contentious levels today. I don't have any open positions, just as a disclaimer as of right now, but we're checking out entries both still on the euro, which seems to be making a move here without us. Euro yen we will go over, dollar yen, and Aussie yen. If you guys have any questions or specific trades you want to look at, as always, feel free to drop them in the box. Avery, sterling yen. Yeah, let me write that down. Okay. Really nice spot for sterling yen. I just don't know which way I want to play it from the scalp basis yet, but we'll look at it. All right, excuse me today, guys, if I go a little under, I'm a little under the weather, so if my voice starts fading, bear with me. So looking at the dollar index, here's what the dollar index looks like to start the day. You guys might have recalled, here was the scalp on the dollar index that we put on the radar charts last week. A quick look, it's interesting because you're seeing, well, let me just go over the technicals real quick first. Obviously, we came off of this big support barrier, okay? This is the 414 reversal day close that came in at 1271. You had the lower median line parallel. You had confluence with the lower median line parallel of the embedded structure, and all of that came right there. You got a nice launch. Remember, our first target again was 12,123. That was sort of near-term bearish invalidation. Then we broke through. So the focus is still for a possible run into that 12,200 level. 12,193 being the open for the month. As long as we stay below that, I'm still favoring the short side. This was a big move. Momentum was showing some, major turnover here, as well as the first 50 break that we've seen for a month. So I'm looking for some dollar resistance. Remember the game plan that we outlined earlier in the week. Jamie specifically in his video, looking a little bit higher to start off the week, and then we're looking for some resistance in the dollar. So seems to be panning out pretty well. Again, here's what the scalp looks like near term. You see that 618 retracement catching the highs here. You had that pivot that held all day yesterday, all day. Here's the break testing that 618. So we'll look for some momentum divergence, which we're already getting. Price action making higher high, the oscillator making a lower high. So we'll look for a turn here in the dollar index. We just did get the release, by the way, of the housing starts for Canada. That came in at 211,000, beating estimates. We'll look at the Canadian dollar. More importantly, building permits. Huge build, and a slight upward revisions at negative 6.7 to negative 6.6. So nice data there on the CAD front. Here's a quick look at what dollar CAD looks like right now. We haven't really had this on our radar yet this week. Let me just zoom this out for you. Okay, here's your weekly open. And this is why I don't have anything to do with this trade, because it's just, there hasn't been any concrete pullbacks to give us some sort of trade against. Remember that opening range that we talked about last week? We highlighted the scalp setup multiple times. It never broke, despite the fact that on Friday's NFP was a double whammy. You had really weak CAD data and really strong US data. Still wasn't able to break the range. It broke actually in the start of this week. So I'd be cautious. Dollar CAD's coming into an interesting area of resistance. You have a basic trendline resistance here off the highs from January. Was that January? Last day of January, right? Yeah, January 30th. Okay, that comes in just a tad higher, around 36.25 or so. So the data here, nice print for CAD. As far as the remainder of the session is concerned, you really don't have too much data, specifically out of the United States. You get JOLTS openings, but looking for those crude inventories, specifically with what crude's doing, again, breaking another to a fresher low today. We'll go over that later on in the session. Hey, Eileen, great to see you. Amir, dollar CAD. So is that good enough a review for dollar CAD? Amir, I haven't really taken any positions on it. Let me know if you have any specific questions. Oops. Again, here's the dollar CAD scalp. We kind of ran through all the targets there. 134.85 was huge. So that would be, for me, near term, the bullish invalidation level. Okay, could get some kickback from here to the downside. Again, building divergence into the highs. But the trade does remain constructive. What's the next major resistance level, Amir? Have to go to the daily for that. So it depends when you are in time. This is what I'll say. I'll be looking at the median line off the lows. Okay, that comes in sort of right 136.75, Amir, but more importantly is that 137.60 level. I don't know if we get all the way up there, but that's going to be a clean 1618 extension off the lows. But you got a couple things to contend with. Near term, instant or immediate resistance is going to be that trend line off the January high. So it's capped every high this year. Subsequent to that, the median line off the lows, and then look for 37.60. He says, thanks, Aaron. More than welcome. More than welcome. So remember last month we were saying we were scared to get too aggressive on the longs because this thing was holding 60. I mean, yesterday it broke 60, not even today, as we made a final crack of that consolidation range. So I hope that helps, Amir. On dollar CAD, would that have been a good long to take 3 to 4 hours ago? Let's take a look at the 5-minute, Eileen. Oops, that's not the 5-minute. The best long that this would have been, Eileen, would have been right ahead of the open of London. You have the Sydney opening range, real tight. You have the Tokyo opening range, real tight. This blue line would be down here, right? Fitting with the Sydney opening range. And on that pop to the upside, long 35.20, stop against 35. You're looking for about 18, 19 pips. Would have probably been the only way to play it, to be honest with you. Really tight. When the range is contracting like that, you look for the breakout, but better yet, the pullback to test it as resistance is really where you want to get long. Unfortunately, don't have necessarily see a trigger that would have taken there, though. So it would have been the break, clear the opening range high, test the opening range high as support, then initiate the long. So this would have been your long structure. So you're looking for triggers down here. Let's see if the 1 minute had anything. Yeah, it would have been tough to look for triggers on it. It would have been, you would have had just to play the levels. Because if you look at it, you were seeing some building divergence into that low. Oops, excuse me. You were seeing some building divergence into that low. But there wasn't necessarily a trigger that would have been too convincing. It seems like it took off from the near-term support there because of the trigger being missing. I mean, the trigger is what I like. Here's the thing I want to just really stress, Eileen. I think I've said this before, but I just want to make sure we're on the same page. We don't necessitate a trigger break, but it adds conviction. So I wouldn't tell you that I wouldn't have taken that trade because there was no trigger. I'm just trying to let you know that if you were looking for one, it wouldn't, you didn't have anything really to work with. This would have been just a basic play of, let me get that chart back. This would have been just a basic play of a break of a key resistance, a pullback check at a support, and then play it on the way up. That's always going to be your best shot, guys. Instead of buying the breakout, wait for the pullback as support, then take the long. Right, no trigger makes sense. Thanks, Eileen. There you go. So the trigger is always there as like an added bonus, right? You have your levels mapped out. You do have a bias on the trade. You're looking for entries. The trigger is just that added oomph, right? Go ahead, pull it. Doesn't mean we can't take a trade without it. If momentum is still continuing to look constructive, you're coming back to a key level, intraday trade. At the end of the day, if the risk to reward ratio works, Eileen, it's something we should work with, or should look at or consider. Hope that helps. Excuse me, guys. All right, so that was dollar CAD, which wasn't anything I was looking at last night, but I'm sure there's a lot of questions on it with what we're seeing in crude. So while we're at it, here's what crude prices look like today. Excuse me, another spill to the downside. So this was pretty big. Here's your December open. 40 to 39.80. We talked about that region yesterday, followed by the median lines here off the high. We made it through all of them. We took out the 2015 low day close from August. Your next downside target is actually the lows that you made way back here in 2009 or 2008, 36.18. So you might still have some downside to go here for crude. Hi, Mike. I was late, but do you have a fib extension for dollar CAD to the upside on the daily? Says Mark. Let's take a look. I do. We've made it through all of them. This is now, that's why we noted 38.48 as near-term bearish invalidation, or bullish invalidation, excuse me. That's also with the sliding median line and even that basic median line there. But that's also, Mark, where this is derived from, the 37.62 target. He says, okay, great, snapshot taken, thank you. More than welcome, more than welcome. All right, so with that out of the way, let's jump right into the setups we're actually looking at right now. Here's what the intraday update looked like. Let's do that first. First one was the euro dollar, so let's bring that up. So the game plan, again, as we noted earlier in the week, some dollar strength to possibly allow us to get a better position here with the dollar, looking for a dollar turnover later in the week. So 107.47, 107.50 was the bullish invalidation level. We were looking for pullbacks here to get on the long side. So the daily looked like yesterday. Here's what the intraday chart looked like yesterday. We were holding within the confines of this nice, you want to call it a bull flag or just a descending channel. We're testing the upper bounds of, we broke through. Okay, so now we're testing the weekly opening range high. And this was the range that we highlighted last night. So if we see a topside break there, we'll continue to favor longs into 109.49, 110 into 110.10. There's a little bit of a range here. And that's going to coincide with that resistance level here. Basic trendline resistance off the yearly low. The upper median line parallel of the current operative formation and a 50% retracement. All line up at 110. Above there, it gets really contentious. You have the 200-day moving average. You have the 100-day moving average. Then you have those lows from September. So it's stacked up, but I would love to see this thing at least get into the 110 barrier. All right. As it stands, we're testing the opening range high. Again, on a break, if you're not already holding a long, you don't want to take a long against 108.40. That's 50 pips away already. So we look for a break, a pullback. We can get some sort of conviction stop to play another long scalp. It looks pretty good. Looks pretty good. Again, on the long side, if it does make its way up, 110 is sort of where you want to start wrapping things up. Taking profit, bring your stops up, because that is a big, larger area of resistance. If we hold, okay, U.S. market opens, the opening range high turns out being 108.90, and then we break to the downside, you can play short scalps into the opening range low for the week. But again, just remember, this is going to be our bullish invalidation level. So as long as price, even if it tumbles from here, as long as we hold above 107.50, we'll be looking for long scalps in euro. Mike, can you snap a larger view of 30-minute euro dollar? Thanks, Christopher Hudson. Sure can. Yeah, let me zoom out for you. Is that good? He says, excellent. Anytime. Hey, Chris, don't forget, my man, you have the scale charts on the report, right? So if anyone wants to take that picture, go ahead and snap that. But you have the scale charts right here for you guys. So I try to zoom out as much as I can and give you some reference on where we are in the trade. Oh, Christopher says, how? I've tried to find them. They're right here, man. So under the scalp report, it'll have daily. They're all pop-ups. And then it'll have euro, scale, whatever scale chart we're looking at. And this way you can get a broader view of what the scalp chart is showing. Just a zoomed out version. So I hope that helps, Chris. He says, okay, got it. Yeah, I know how frustrating as it can be because you want to see where the trend lines are coming off of, where the fibs are off. Trust me, I've been in your shoes, guys. All right. So that's euro. Still broadly favoring the upside. Not sure if we're going to get another pullback first. If we do break the weekly opening range, we'll look to buy pullbacks. Again, 105, 109.49, initial target. And we'll look for that stretch to see if we can get into 110. Questions on the euro? And Eileen, on this one, there was actually some decent triggers. Here was a trigger just off that last rally. And that was a beautiful, beautiful entry. Why? Because you had the trigger break, okay, to the upside. Price was right above support, and your stop would have been right against the range lows here. So like a, what is that, 15 pip stop, looking for about 26 pips, you would have taken that out already. Aline says, yes, okay, got it, right on. All right, next on tap from last night's report was the Aussie yen. We talked about this in the webinar yesterday, the public webinar on Daily FX, if you guys joined in. It came into a big region of resistance. You know, it was a region that we talked about here in 90.02 into 90.18. We probed well through it, got into 90.60, excuse me, which was the 200-day moving average before turning over. So we're looking lower in Aussie yen, while below 89.70 was the game plan. A break below the 89 level targets, what was it, 88.20, I believe it was. Here's what Aussie yen looks like now. On the daily, we've come into a near-term region. Oh, we're breaking through. 88.64. Confluence support, trendline support, and the 618 add to that the highs from October. This is pretty big. Momentum trigger. Wow, this is all happening while we're doing the webinar. The momentum trigger just gave out as well. I was looking at this morning. Here's what the intraday chart looks like for Aussie yen. All right, so the levels that we mapped out last night, initial target or initial support was 89.30. You didn't get any bounce. You didn't even get an opportunity to get back in the short before it came down, took out 88.06, 88.61. Final target is 88.20, and we're coming into that right now. So this might be a little bit bigger of a contentious region of support, guys, just because of the pivot that you've seen here in price. So you have the highs from October 23rd. You had that breakthrough in early November, support, support, support. Add to that, it is a longer dated 100% extension. So it's my initial target or initial support, final support for this scalp to the downside. And remember, we were looking at a couple of trades last week, guys. I don't remember what jogged my memory, but we were talking about the fact that when you see these descending channel breaks or descending pitchfork ML formations break to the downside, that can be the sternest part of the move, because we're already in a slippery slope. The bias is already weighted to the downside. Once that domino effect starts playing, it just really accelerates the move even more so. So look for 88.20, 88.09 for soft support here for Aussie yen. No place to enter now, though. No, not from here. Not from here. Let's see what the 5-minute looks like. All these beautiful triggers. I think I'm going to move out to London. You guys are getting all the cream of the crop here as far as triggers are concerned. No, it's a messy one, Eileen. It's a messy one. The ideal entry on this one would have been to actually buy that break, or to actually sell that break of 89.38. Why? Because that confluence region, as soon as it came back and tested its support, I would have went to break even. You want to get into trades where you can put a break even stop as fast as you can without having to be concerned, right? So if it's a major key level, it breaks out, and even if the pullback doesn't get enough chance to tag it, a stop against that region on a break like this, where you're clearing a formation, you're clearing a 50% retracement, you're clearing a clear pivot in price. Sometimes you just gotta get a little more of a gutsy play on that one. So look for near-term support, a little bit lower from here, could get a rebound. At this point, if we do achieve this, I'd be comfortable bringing down our bullish, or our bearish, excuse me, invalidation level to around that 89.10 region, basically that high, but specifically over time as we get deeper into the week, it's going to be this former median line support and that 618. Big break. Big break. Any questions on Aussie yen? Again, guys, if you need to, feel free to take a quick snapshot of that chart. All right, so that's euro. Aussie yen. Okay, so we've covered Aussie yen. Why don't we go ahead and cover Aussie dollar and dollar yen? So here, or excuse me, before we do that, I want to jump into Aussie Kiwi. So here's what we looked like last night in Aussie Key. This setup was highlighted on Sunday as we were holding right below that near-term resistance, okay? The shift, or the break above this, for me, would have shifted the focus all the way up to the upper median line parallel line. But don't forget, we're bearish, right? So we're still inherently looking for evidence to suggest that the trade's not going to turn higher. You got that, okay? On that rally, momentum, yeah, crossed 60 for a couple of minutes here, but we came back under and tested 60 and it held as resistance. You just set a clear weekly opening range. What I'm focused on right now is if we break the opening range low, you'd look for that drop into 108. The levels haven't been changed since Sunday. They're exactly the same. So you can see the pivot here, break to the downside. You had that trigger that we highlighted yesterday. In momentum give out, stop against the highs, a little bit wider of a range, but 22 pips, you would have gotten well over 22 pips at this point. So if we break lower from here, again, wait for a pullback, see if we can get a better risk to reward. We'd look to play it down into that lower median line parallel, more importantly, that 38.2, and that comes in at 108.20. So here's what the chart looks like sort of on its grander scale. Pretty clean, okay? It's still early in the week, so I don't really want to mess with the bullish and bearish invalidation levels. I still kind of think we have to keep the bearish invalidation level up at 110.20. 110.20 is such a critical region of resistance. Again, that January 2013 or 2014 rather trendline pivot is still there along the 618. Last week's highs. I still like a short side below this. So if we break below this 108.60, look for the 200-day moving average. Wouldn't really stress it, but it would be a soft target near 108.19 or so. We're looking at 108.20 anyway. And then key support is going to be down at 107.60. And 107.60 is this trend line here. Same slope. Nice pivot, support, support, break, resistance, break, support, support, near 107.60. So long story short, looking to sell rallies in Aussie Kiwi, bearish invalidation still remains at 110.20. Next downside targets on the immediate side would be 108.20, and then 107.60. And this, by the way, guys, is just a measured move. I highlighted this on Sunday's report. If this is a true head and shoulders formation break, a measured move off the neckline takes you into 107.60. We had a soft target at 107.62. Can't remember what that was, but you get the picture. That comes along exactly with that slope line, mirroring the slope from that 2014 advance. Questions on Aussie Key? Still love it. Christopher Hudson says 107.90 has the 1618 from the 1124 high and is the 50% or is a 50 back of the 1030 low. Do you have those? 1030 low. So I removed the 50%. You said 107.90. Yeah, I had the 50% on there. Let me add it back on, show you why I took it off. So here's the thing. Excuse me, guys. Oh, sorry about that. Excuse me. Here's the thing. We don't want to blindly follow fibs, Chris. So if I tack on a fib line and I can look back in price and I haven't seen any type of reaction around those levels, it might not be something you want to stress. 50% retracement is always something you want to keep in mind. But here's again what I'm looking at. If we make it out the underbelly here and we break this 38.2, which I think you might agree probably has a little bit more merit to how it's pivoted, right? Support, support, resistance, support, much cleaner pivot. And if we break out the underbelly of this, I don't want to put too many levels. You know, you can get something called paralysis by analysis, guys. And if you have too many levels mapped out, you're going to end up closing out trades way earlier than you need to be. So my point being is if we break this if we break this region below 108.20, I'm just going to want to see the entire head and shoulders objective taken. So there's no reason for me to interrupt that by just looking at it 50 for the sole purpose of it being 50. Do you know what I mean, Chris? I always want to look back and make sure that that level has offered some sort of pivot in price or some sort of confluence on something I'm looking at. Now, I'll tell you this, Chris, when the 50 would become more important. The 50 would be more important for me if this thing lags here. If it lags and dribbles and dribbles and dribbles and dribbles. And then tomorrow, we're talking about that 50 lining up with the median line parallel. Now it's significant. Now it's significant. But on a straight shot down for the remainder of the U.S. trade session, this is still the first area I would look for support. And if that breaks, I'm going to look for the head and shoulders objective. Does that make sense, Chris? Initially, I took that 50 off and used this 38.2 because when we started the week, that was confluencing with the median line, right? Heading into tomorrow, again, if we don't make a move lower and we kind of just dribble sideways, we'll be highlighting that 50. But until then, we'll keep it clean with just that 38.2 there. I hope that makes some sense. He says, yes, it's a refinement that I will incorporate. Right on, right on. Yeah, the markets aren't in a vacuum, you know, especially guys who use momentum trade strategies. They struggle a lot with that kind of thing as market conditions are moving or changing. Not the same thing will work every time. So I don't ever blindly follow any one indicator, right? If the indicator is not showing me historically in price that level matters, typically won't put too much weight on it. All right, so that's Aussie Key. Still liking the downside there. Okay, that is Aussie Key. Next up on tap is dollar yen. Here's what dollar yen looks like. Okay. And here's what we looked like yesterday. Okay, so basic trendline support off the highs. We talked about this yesterday in the webinar about 123.42 into 123.54 being a region of which is still going to be critical resistance. And this is as a pair where I think we're finally going to get a decent opening range break out of dollar yen, like somewhere what we saw in August. We had a nice opening range just above support. Now you have a nice opening range just below resistance. So let's jump into the intraday charts. The only thing I want to highlight here, 124.41, 54 key resistance. Key support still down at 122.12 or so. But near term, here's what the trade looks like. I know that swing trades are still holding the longs. So Aussie yen almost at target. Oh, I'm looking for dollar yen, 30 minute. Here's what it looks like on the 30 minute. All right. So we said the breakdown is likely to go back a little bit further. Near-term momentum was turning over yesterday. You could see that as that thing was moving and sort of capping out. We'll be looking for initial support around 122.95, backed by 122.67. So 122.67 is the next downside target here. 122.40, well, I don't want to go through all the levels, but here's what I want to say, guys. The stop on the swing side of trades is still down at 122.20, but that's a major level, okay? Not only is it that low for the November swing 25th low, but more importantly, it's this trend line. Okay, and it's just a basic trend line support. That comes ahead of 120, of 122.20, that is, excuse me. So look for near-term support at that 122.67 pivot. Bearish invalidation at this point would have to be back up here. So as long as you're below 123, 122.97, you'd look to sell rallies towards that low. This thing's like ping pong, guys. There's really nothing to do here but sell near resistance and buy near support until we clear this godforsaken range. If we get through 124.40, 124.54, big levels, that 124.13, okay? It's a 2007 high. You got the basic trendline resistance off the highs there. You have a basic trendline support off the lows there. Big confluence. And then, of course, the reversal day close up at 124.46. But before we even talk about any of that, the range in focus is 124.41 into 122. Any questions on dollar yen? What I just want to see is if I grab this parallel and I extend it here. Hey, look at that. 122.46. Not bad. Excuse me, 122.67. I don't know why I said 46. And we'll still keep that highlighted there as the near-term bearish invalidation level. All right. Okay, as disclaimer, I'm just checking my notes on what I wrote on euro dollar. Pullback progressed as expected. Initial support 122.95, second 122.67. That's what we're targeting now. 122.40 is next. Looking for possible long entries down there. I noted that to myself yesterday. So if we look at the daily chart again, as we get near the range lows, momentum coming into support, that might be an opportunity where we can try to press another long on dollar yen if we're not holding this swing trade already. So we'll see if any long triggers will materialize here. Don't forget, just as a real quick reminder, we do have on tap next week, next Wednesday, a week and a day from today, the FOMC interest rate decision for a dollar yen will be important, but it's backed just a couple of days later by the BOJ interest rate decision as well. So word of caution there. Euro yen is next up on the list. Here's something I was looking at yesterday as well. Here's what euro yen looks like. And it's a very similar trade to the dollar yen and or the euro dollar rather. Here's what euro yen looks like on the daily. You know, this was a huge day, huge outside day that we made. And where it stopped was textbook, 100-day moving average, confluence with the upper median line parallel, confluence with the 618 retracement, all up here near 134.46, 134.50. That's exactly where this thing capped out, pulled back. I was looking to see if we can get a pullback a little bit deeper, back towards like 132.80, which was last month's open. So I'm not on the long side of this yet, but here's what the intraday chart looks like. The levels are pretty clear and mapped out. Nice channel break. There's that upper median line parallel. Again, there's the 100-day moving average, almost a perfect tag before we pulled out. Look for consolidation here to start off the week. You set an opening range high just below resistance. You set your opening range low yesterday. Look for a break of this range. And specifically, if we break to the upside, you're looking at, you know, a breakout potential that could take you way higher, maybe even as high as like 136. So something to keep on the radar. Something definitely to keep on the radar here for euro yen. In consolidation, right below resistance. Sort of a decent play. All right, so that is euro yen. Let me jump into your questions. I do see a couple hitting the board here. If my if my voice will hold out. Dollar CAD. I covered that one, Mark. Someone wanted something CAD. Aussie CAD for Mark. Sure. Let's take a quick look at what the Aussie CAD's doing today. Ooh, this guy. Yeah. So this was amazing. Last week, when this thing surged and popped through on Friday, look where it reversed. Look where it reversed. Even though everyone was probably looking at that trend line, resistance, and it looked like it broke. This is all the way back to the 2013 highs. It caught it almost to the pip. 42 was the actual level. The high was 44. Okay, so real interesting level. Mark, I don't know what to do with this. I don't know what to do with this. You have a pending support trigger, which looks like it wants to give out. From a swing trade of things, you're kind of counter trend trading, and I wouldn't be comfortable until we get back below that trend line on a close basis. Yeah, I don't even have, you know, a game plan on something like this. I would just kind of be looking for a near-term opening range break. He says, I know it's basically a go short and close your eyes thing. I didn't want to say that, Mark, but that's basically what it is, right? It's kind of, you got to shoot from the hip on this one. But it did come off a big level. I remember looking at this on Friday and being like, wow, this thing was rocketing. Just the day earlier, you had an outside day reversal that took you through resistance. So honestly, I just thought this was going to be a blip in the road, and then we continue on to 99.36, which still could be the case. But just the reaction that we've gotten at it and the fact the last 2 days we've still closed lower on the session. Interesting. Has me looking at it for sure. An operable trade, that's debatable. That might work. So this pitchfork, which I kind of just eyed out, looks like it caught the highs and caught the median line. Let's take a quick retracement off the low. 50 lines up pretty nice. That 618 lines up pretty nice. We'll check this up to 764. Huh. Okay, so it could be the play. So for this one, Mark, what would validate the turn to me would be a break below this region right here. So if you break that pivot, not only is it an opening range break for the initial opening range for the week, but it's also going to take you back below those highs that you made at 97.40, which were when? That's back from the August highs. And it would break the median line of the current operative formation. You'd look for targets. This is real tight here. I wouldn't necessarily even worry about 97.14. More so, I would have a soft target here at that initial high for the month. And then 38.2 comes in at like 96.34. Not a bad setup. The only thing we need to get confirmation on is the turn, I think. Mark. He says sliding parallel from the 2013 April high. Oh, cool, your 30-minute chart. I like. Nice. You sure have an eye for that. I appreciate that, Mark. But do you see what I'm saying? We could be on the mark of a turn here, but you'd need to see a little bit more conviction on the momentum side to turn this thing over. I love where we stopped. I love where we stopped. And if this thing is going to pull back to even test the former median line, which I think everyone's going to agree this was a nice structure for a couple of months, that's going to take you all the way down to like to 97 again. So it'd be a nice play. But yeah, those levels I'd be looking at. Hope that helps. Mark says, gotcha, glad I asked and that you replied. LOL, a more than welcome, Mark. Farouk says, sterling dollar, please. Coming right up. Good old British pound. So, we highlighted this setup last week. Here's what we're looking at with the British pound. In this descending channel formation, near term, here's the 5-minute, 30-minute looks like. Levels haven't changed. Okay. Near-term support 149.50 backed by, the only thing that's changed is this. I added this yesterday, another pitchfork to the upside here, which looks like it caught both that median line pivot and the highs that we made late last week. So here was what we were highlighting yesterday. We kind of broke through, tagged as resistance and moved lower. So I am looking for this trendline support to either catch the low or to validate the continuation break lower. I'm kind of thinking along the lines that you see a hold here. So we'll see. I haven't really gotten involved in sterling just because the cost of holding it is more expensive, considering that you're only getting 25 pips as a quarter ATR. If I'm going to hold a sterling pair, I've been holding them versus pairs that have a lot wider ATR, sterling AUD, sterling yen, something like that. Oh, by the way, sterling yen, I do have to review that for you, Avery, in just a minute. But sterling dollar, I would be looking for support 49.50, maybe a little lower, 49.35. Look for some long triggers off that region. No, that's disgusting. Almost some divergence. Okay. Yeah, the levels haven't changed. I still would say that the bearish invalidation level now has to be lowered to here. So as long as you stay below that, you want to be selling rallies. Look near term though. The immediate focus is for some bottoming, some support here. You got me really interested in this. I think I actually might look for a long position as we open up US trade. See if that lower median line parallel holds. Might be a nice play back to the median line. Keep in mind, we had the BOE on tap this week, guys. Almost forgot. The BOE is on tap on the 10th, I believe. Yes. So that is what Thursday. So the broader picture, just to give you some scope. Okay. Thanks, Eileen. I'll see you tomorrow. All right. I think I got all your questions. Let's see here. Aussie CAD we covered. Oh, Sterling Yen. Avery, Sterling Yen. Here's what Sterling Yen looks like on the daily chart. Coming in some nice support right now. That's the 618 retracement from the advance off the lows that we put back in October. That takes into 183.75. Excuse me. Basically, the low we made today so far is 183.74, 74.9. So you're basically looking for some near-term support here. The momentum signature still remains pretty bearish. Here's what the intraday chart looks like. If you remember, our focus was on 186, and it has been for the last 3 weeks since we broke below it. This is a rejection of not only a break above the upper median line parallel for the broader formation we're working with, but also of that key, of that key resistance. So 85.14, this was the bullish invalidation level, right back into key support, which is basically defined by the lows that you made here in October and the 618 retracement, 83.75, 83.80. We're there right now. We're there right now. Now, this thing is in oversold territory, so it could plow right through. I'm not going to try to fade this by any means. A subsequent break, I really don't have anything until a soft target at 83. Decent pivot in price there over the last couple of months. And then you're looking for 82.56, which would complete a 764 retracement. And that actually coincides later tomorrow with the actual median line for the formation we're in. So long story short, you're at immediate support right now. Watch this. If you're holding short exposure, I'll be taking some off the table, bringing your stops down. Bearish invalidation level now gets brought down to that same region, right around 84, 86. The origin of the breakout, or the breakdown, I should say. All right. Avery, talk to me about this. Sterling Yen. Do you have any specific questions? Mike, when drawing RSI trend line for trigger trades on the 30-minute, 5-minute, we need to see price touch it 3 times before that trend line is to be valid? Thanks. Great question, Avery. So typically a trend line needs 3 tags, right? 2 is speculative, 3 is confirmed. That's what I always say. You're not always going to get it like that in the oscillator, though. Let me take a step back, Avery. The more tags you have of that trend line trigger in RSI, the stronger it is, for sure. Just like basic trend line support and resistance. But it doesn't mean I won't take a trend line break if it has 2 tags, right? Because we're only looking for this to add a tool. It's just another thing in your tool belt, guys. Price action is going to rule everything. So if you're coming into a major support, we see an opening range break to the upside, whatever the reason is that you're looking to get into the position, and there's a 2-point trigger break there, and it breaks, I'll take that trade. If there's a 3-point trigger there that breaks, maybe I'll trade that trade with a little bit more conviction, meaning I'll have my leveraged up a little bit. If I'm trading X, I'll trade maybe X and a quarter, 2X, right? So gauging whether it's a 3-point tag or 2-point tag in RSI, again, I'd never want to stress any oscillator as my major premise for the trade, but when it adds conviction, those are the trades maybe I'll go in a little bit heavier on. Does that make sense, Avery? So yes, the more points you have, the better. The more touch points you have, the better. But it doesn't mean I won't take it if it only has 2. If price is showing me that it's a good setup. She says yes on RSI. Thanks for the levels on Sterling Yen, Mike. Missed such a good opportunity, but won't chase Won't chase now. Yeah, it's a story of my day, last couple of days. We have a lot of things going on, guys. IDO research is going live rather with us this week. If you haven't checked out the platform, please do. I've got a lot of emails from you guys with regards to what you got to do to sign up. You got to do nothing. Everyone who's in the room here today and all current subscribers are going to get free IDO search for the rest of their subscription account for life, basically. It's for new clients. So any ads that you see, try out IDO now. That's for new clients, where we will be charging an additional fee for that starting this week. So go on there, mess around. There's a survey on the IDO page. I would really appreciate it if you guys can give us some feedback. Again, we're still very close contact with IDO research team. So they're looking for feedback from us on how they can tweak it, make it a little bit more useful for you guys. If you think of anything that it's not on there that you'd like to see, but there's a plethora of knowledge. Don't forget, on the insights page, scroll to the bottom, proprietary research from the IDO team. They're not always going to be on FX. They do cover indices, they do cover commodities sometimes, even single share stocks. But it's an awesome, awesome tool, and I'm really excited to have it as part of the SB offering. This is also their first exclusive offering to retail. This software has been primarily used in the market side of things for institutional trades. It's never been released for retail use, except now exclusively through SB. So we're definitely really excited about that. Avery says, regarding SB or IDO, do you think you can show us some more time using, or show us how you use it for scalping? So Avery, I don't necessarily use IDO for scalping. It's very important that we keep that clear. The IDO functions, as far as the algorithms that it's running, are on a daily basis, right? So there won't be any change in that reading intraday. So for us, what we want to use is we want to use it to ascertain bias, and then that's going to help us dictate what our scalps are going to be. So it's never going to be something we're going to be watching throughout the course of the day where, oh, IDO said this, let's jump into a scalp. It's not that near term. As a quick update, they are working to get intraday data. So eventually that might be an offering that we do have. But Avery, institutional traders and longer term big bank traders, hedge funds, they're not really stressing the intraday tick by tick points. That said, we can definitely, it's a huge tool I look at daily just to figure out sort of what my bias is. And as Jamie likes to call it, guys, there is a webinar on there that we shot, that Jamie shot, that gives you a nice in-depth platform walkthrough. It's on the IDO page. But the windows into opportunity and price movement is really what the major gain of that is. So if I'm at support on euro yen, so for example, euro yen bias was super bullish on IDO last couple of days. If we were at support, IDO was giving us opportunity or a upside bias. You see a break of resistance. With an IDO search like we saw, this was a trade you want to load up in, right? Again, another tool, except this one is a completely unbiased tool, right? IDO is completely as objective as you can get, looking at just strict price pattern or price action patterns. So I hope that offers some help. Where do you look at to confirm bias on dollar yen? I'm not sure what you mean on that. So let me say this, guys. If you're using IDO for the intraday, you want to be focused on the shorter time frames. But for dollar yen, I don't necessarily need anything to tell me what the trend is, right? Right now, you're in a flat market. You're in a range, right? On a broader scheme, I don't think anyone's going to say this is not an uptrend, right? Oh, he says, sorry, on IDO, I mean, which page do I look at to confirm the bias? Every reading is telling you what the bias is, Avery. It's giving you the window opportunity of where price action should be over the next X time frame. So I'd really encourage you guys to go through this. You'll find it helpful. If you go to the IDO search page, second link down right here is the platform walkthrough. And Jamie will go through a in-depth discussion on how to use those, what those mean, and how we use it to ascertain bias, okay? Basically all it's doing, Eileen, is helping you make that decision. So it might be a nice tool for you to just kind of mess around with and get acclimated to. Kyle says, it looks like we might have a long trigger on Aussie dollar. Can we look at it? Yeah. Let's take a look at Aussie. I do like the divergence into the lows here. Yeah, well, we missed it, but yeah, that would have been a long trigger high in price. That's ugly. I probably would have just used this short-term one, but the reason that this, again, the reason that these even exist, or the reason why this is going to be something I would look at, again, really, really meager 2-point trigger touch, right? Who was asking about this? Was it Avery? But you're getting divergence into support. So although the strength of that trigger isn't really all that, price is at support. You have some divergence even into here. This is all divergence. Lower low, lower low, lower low, lower low, higher low, higher low. So the propensity of it to pop to the upside is definitely there. Kyle, the only thing I want to say is you're ahead of the US opening range. So I'd want to see that opening range topside break to really get validation. But yeah, I mean, that would have been a really nice entry. You're talking about what? It's like a 10 pip stop. Those are always going to be your best bets. All right. Perfect timing, guys. I'm going to wrap it up here. We'll be back on tomorrow. Hopefully my voice will be a little bit better off and we'll be able to go full on. Keep in mind also tomorrow we do have the SB intraday strategy webinar with Jamie Setley at 1 p.m. Eastern. And I think that's all I have. So if there are no other questions, guys, we'll wrap it up there. I'll see you tomorrow. Best of luck trading.